Welcome back. And joining us for a look at the day's market action is Nick Kunze from Sanlam Private Wealth. Thank you so much for your time, Nick. Really what stood out for me when I woke up this morning and actually throughout the trading session was the hit that the gold miners took today. I even looked again before the trading session ended, and Harmony was beaten down so bad by almost 8%. None of them were down less than 6% or 5%. Talk to me, is there anything specific that's responsible for this kind of lackluster mood that we saw in the gold miners today?
Yeah, evening's not. It's quite a difficult one to, I guess, dissect. I mean, a lot of picking up some noise. It's a lot of sort of people unwinding positions out of that sort of short yen position ahead of the Bank of Japan. It's very correlated to gold. Gold is correlated to the BOJ and the sort of dollar yen trade as well. Bit of rumors of that. Difficult to kind of get a grasp of it because given the uncertainty and a little bit of nerves out there, you'd expect gold to get a little bit of a bid, but battle to hold 2,400 a few days ago, and it's just been grinding lower ever since.
Yeah. All right. Well, let's check in on some positive news because we did have US GDP coming out for the second quarter, surprising to the upside, growing 2.8%. How exactly are investors reading that?
Yeah, this one is throwing a little bit of spanner in the works because everyone forecasting possibly 2, maybe even 3 interest rate cuts by the Fed, which meet in the month of September. Certainly are forecasting that rates have sort of topped for now, but this one throwing a little bit of concern. The U.S. economy is still surprising, very resilient. Although if you look down at the monthly numbers, you can see consumption is slowing a little bit, and also that. There's no doubt about it. There's unemployment numbers are starting to edge out a little bit too. But all in all, I mean, just considering, we were quite negative before that print came out at 2:30 SA time and pushed that market back into the positive. So resilient for now anyway. But they are backward looking, Zanati, just remember that.
Yes. All right. Well, let's take a look at China because, I mean, we've seen the tone of the Chinese consumer, particularly demand for luxury goods from some of the results that we have seen from these luxury counters, LVMH, Burberry, Hugo Boss, all of them. And now today we got news that the Chinese central bank has cut interest rates for the second time this week. How much nervousness is that inducing?
Well, I think it's that they need to do something. I mean, the PBOC and the Chinese Political Bureau have been urged from all sides to look for a sort of a big stimulus plan. And unfortunately, since the start of the year, it's been this little piecemeal offering. The LBR rate, they cut by sort of a 10 pip here and a 10 pip there. They're really looking for big results. A little bit more action today, as you said, after Monday's sort of cut. Today, a complete surprise, 20 basis points by most of the big banks.
Yeah.
But it's really battling. And I think to your point, questions now being asked, okay, so how bad is it in China? And we've seen it exactly pivoting back to those luxury goods where 40-odd% of the earnings comes from China, severely under pressure too. I think just pointing to certainly a slowing global economy in general.
Yeah. All right. Well, let's talk about Anglo American because it did come out with its interim results today. Of course, we did get results from Kumba and Amplats earlier on in the week, and now the parent company coming out with the results. And I guess as expected, we did see a reduction in the bottom line. They talk about lower commodity prices, but actually seeming that there's an improvement in terms of the cost base there. What did you make of those numbers?
I think they were okay to slightly better. I mean, they have guided recently, and there's been no secret of the numbers given the recent takeover attempt by BHP. I think this is a bit more of the same. I think the positive surprise was perhaps diamond sales not as bad as we thought, and generally overall not such a bad picture. I always think the markets are quite efficient. Stock price was up a little bit on the back of it. I just wonder if Anglo's they're trying to get their house in order, but there's probably another bid coming not so far away. But as I said, in general, then on the back of Kumba, which they've obviously got a big share in as well. Again, I thought those numbers were a little bit better than expected as well.
All right. Well, let's get to your stock pick for today. What are you choosing?
So going with a little bit more defensive, and it's offshore for a change. I normally choose local, but we're going with Johnson & Johnson, traded on the NYSE. Most of you will know it. It's part of everyone's lives in some shape or form. But defensive, it is a healthcare. Healthcare tends to do reasonably well in a US earnings cycle. Johnson & Johnson trading around about 23, 24 times price to earnings. It's about down 1% or 2 on the year. It needs to play a little bit of catch up, but I think looking pretty good as we take a more defensive stance going into those November elections.
All right. Well, thank you so much for your time and for your analysis and insight today, Nick. That was Nick Kunze from Sanlam Private Wealth.